Today we had the CPI data report and very volatile price action, and tomorrow we're going to get the PPI report next. So first up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, today SPY was up 0.47%, and intraday we were starting to break out below the support line, which is right here at 411, and it did appear below that level that we were going to continue lower to close the gap at 407, but intraday we found buyers right around 409 and closed back over 411 yet again, but still below the resistance at 414. So this is still going to be price action stuck within a trading range between 411 and 414, and tomorrow we do have the PPI data report, so we could finally get a break out of this range, but in the event we don't, you need to have realistic expectation. As you can just tell by looking at the chart, we have been range bound going all the way back since the beginning of April, and if you are not effectively trading this range, you are without a doubt having a very difficult time in this market because there is very little trending in either direction. Now when you're in a range, you simply need to be following price action and buying at support and selling at resistance. Because there's no clear trend, there's no reason to be holding on to any positions for any prolonged amount of time. So you can short at resistance or buy at support, and if you're shorting at resistance, you need to take your profits at support, and if you're buying at support, you need to take your profits at resistance. You can take both sides of the trade as long as you know how to effectively do that. Don't compound your losses and lose on both sides. Now with that being said, we are very likely going to break this range in the very near future, and that is going to be the break above 414 and then 417. Now I'll give you bulls a warning, there is a lot of critical resistance on SPY between 414 and 417, so the bears have a very simple time shorting the market at these levels. That is why we are stuck in this range, because if the bears were not strong at these resistance levels, we would already be trading at SPY 420 or higher. So you're going to have a much simpler time in this market if you do not get bullish until we break through that resistance or wait until we get to support levels. Buying anywhere between support and resistance is where you're going to get whipsawed. And if you're bearish, you should only be shorting when we get to the resistance levels between 414 and 417. And if we break out, you need to take that loss because we're likely going higher towards 421 to 425. So understand this is a market stuck in a range, so have realistic expectations if you're trading. And if you're swing trading, it's still going to be a very boring market while we're stuck in this tight range. So you're instantly more bearish below 411 for the gap fill at 407 and then support at 404. And you're instantly more bullish above 414 for the gap fill at 415 and the resistance at 417. If we break 417, we have a bullish trend continuing, and if we break down below 404, we're heading into a bear trend. On the Nasdaq 100 triple Qs, we were up 1.09% today, and intraday we did bounce off of the rising 5 EMA, and we're still finding support above 321. So we are still getting higher high breakouts after higher lows. We had the higher high breakout above 321. We came to the higher low bounce off of 316. And then we have the higher high breakout back over 322. And then another higher low at 321 into the bounce up to 325. So if you just take off the candles and look at price action, this is clearly higher lows and higher highs. So we still do have a bull trend. And we still do have the outstanding upside price target at 327, which is the double bottom price target. Whether or not we hit that target before we see any amount of cooldown is to be determined, but as you can tell, the risk-reward ratio is getting a lot better for the bears as we approach these higher price targets. If you simply take today's close to the double bottom price target, that's less than 1% to the upside, all the way down to the gap fill at 315 is 3% to the downside. So this is the time to get more risk off as we approach critical resistance levels, because you can always get more bullish if we break out above them. But even if we break above 327, we're going to have strong resistance at the August highs at 333. So be very defensive as bulls as we approach resistance. And if we start rejecting from resistance, you can even short from those levels and use that resistance as your risk level for your short trades. You're bullish as long as we're above the breakout at 321, so manage your risk right at that level. And if we break below it, we'll be looking for the gap fill at 315. On the Dow Jones, we were down 0.08%, and we did have a very volatile intraday price action move all the way down to 332, and we fully closed the gap at 333. As you can tell, we are still rejecting from the resistance at 337 with the red body candle close, so if we continue lower after PPI, we will be looking for the gap fill at 329. These Bollinger Bands are expanding, and our rising 200 daily moving average is also in that support zone. So in the event we go all the way down to that support, that will be considered strong support that we could see buyers of the dip. Otherwise, we are waiting for the bulls to break resistance at 337 to get more bullish for the gap fill above at 340. On the Russell 2000 IWM ETF, we were up just over 0.5% today, and we failed to get the breakout above 175, and we're still trading below negatively sloping 50 EMA and 20 moving averages, so we are still in a bear trend as long as we're below 176. Above 176, we'll be looking for the gap fill at 181, and a rejection from this resistance at 176 to 175 could bring us down to close the gap at 171.5. This is a giant head and shoulders above the neckline at 170, so if we break 170, that's confirmation that we're going to much lower prices. On the ARKK ETF, we were up 1.41% today, closing right on top of the negatively sloping 200 daily moving average, which is going to invite bears to start shorting from resistance. We're going to have resistance right here at 39 and 40.5, and if we break above 40.5, that is going to look like a bullish breakout. We have gaps to fill to the downside at 38, 36, and below 32. On the VIX, we were down 4.35% today, and the VIX continues to crush, and we're back below all the moving averages, so we still have low fear, which is exactly what you're going to see in a bull trend. We need to see the VIX spiking out above 20 to get the bear market back, and we have no idea when and if that's going to happen, so we're simply going to follow the price action. On Bitcoin, we're currently flat with a very doji looking candle getting rejected below this resistance right around 29,000. And we are looking like a double top rejection from 29,500 while we're trading below this neckline at 28,000. If we break support at 27,000, the floodgates open and we see quick selling down to 25,000. And we're not bullish until we break above 29,500. On Google stock, we were up 4.1% today as Google is continuing that bullish look above all the moving averages with the bull trend, and we did fully reach our price target at 110 yet again, and we exceeded it, and we're very close to our next price target up here right around 116. It's going to close the gap and reach the top of the channel, so that is likely where Google is heading as long as it's trading above 106. If you want to, you can manage your risk from this breakout at 109, and you can stay bullish as long as we're above these breakout levels. On Amazon stock, we were up 3.35% today as Amazon gapped up and closed near the high of the day at the resistance right around 110. Now keep in mind, this is resistance and we do have a gap to fill to the downside, so I would not be chasing this, even though it is possible we are going to the top of the channel to close the gap at 115. Anytime we have a gap below and we're closing at resistance, you need to be cautious of a rejection, and if we get rejected from 110, we will be looking for the gap fill just below 107. We're back over the 200 daily moving average, so we are looking a lot more bullish as long as Amazon can continue to trade above 106. On Microsoft stock, we were up 1.73%, and we did break out from another higher low into another higher high on that breakout above 311, which means we could be well on our way to the next price targets at 315 and 318. Again, there's not a lot of upside reward for the potential of the downside risk, so make sure you're managing your risk right here between 304 and 307, because if we break below that, we're coming back down towards 290 to 293. On Nvidia stock, we are up 1.1% today, and we still have the price action above all the moving averages with the bull trend, and we're still trading above the breakout at 280. That means we can still reach the price target at 298, but we're instantly more bearish if we break back down below 280 or below this support at 275. Below those supports, we're likely coming back down towards 262. But right now, we still have the bull trend and we're still trading above all the moving averages. On Tesla stock, we were down 0.36% today, and Tesla got another daily rejection from the resistance at 173. So we need to clear that before we can close the gap above 177. You need to manage your risk right here at critical support at 167, because if we break below that, we're coming back down to 160, then 154, and then the gap close at 146. On Apple stock, we were up 1.04% today, and Apple is closing at equal highs, which is just below 174, so we don't have a bull breakout just yet. If we get the breakout above this previous high, then we're looking for 174.6 and then 177. I don't necessarily think Apple has to go any higher than this, so if we do get rejected, this will look like a double top if we start to break down below 171. That will easily take us back down to the support trend line at 168 and to fill the gap at 167. On the financial sector, we were down 0.56%, and we fully closed the gap to the downside at 31.85, but we still have a bear trend and we still have a gap to fill down here right around 31. So be cautious while we're making these lower highs and lower lows, and we are still in a bear trend. The industrials were down 0.36% with price action back down below all of the moving averages, so wait to get bullish until we can clear above this resistance above 101. The healthcare sector was up 0.28% today, bouncing off of the positively sloping 50 EMA, but we still need to clear that resistance at 134 before we can get bullish. The energy sector was down 1.13% today, getting rejected from that resistance at 80.5, and we are still in a bear trend, which means we could be trending lower towards that gap fill at 73. So jumping back over to the S&P 500, today was the CPI data and tomorrow is the PPI data report, so we are likely going to see plenty of more volatility and we are still stuck in a trading range. As you can tell from the analysis, the big tech sector is carrying the way higher, which is causing strength in the triple Qs. The triple Qs can't do all of the heavy lifting forever, so we are definitely getting more cautious as we reach higher prices, or until we see SPY breaking out above that critical resistance at 417. So be cautious, and if you're bullish, manage your risk very well, because if we do start to roll over, we could see high volume selling. You don't want to get caught holding the bag, so manage your risk at support and instantly get more risk off if price action breaks down below support. If you want to come trade with other price action traders and get access to all of my intraday updates and analysis, come join us over at the Stocks Channel Trading Discord community. I also have my own trade alert service called Bank Trade Alerts that will send you all of your buy and sell alerts directly via email and text message, and only trades at ETFs TQQQ and SQQQ. You can find out how to join the Stocks Channel Discord or Bank Trade Alerts by clicking on the links in the description of this video. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.